Is Tesla stock now cursed given that Elon Musk was named Person of the Year by Time Magazine? What do I mean by that? Well, it's interesting. There's quite a history here looking at magazine covers. When magazine covers can top tick or bottom tick significant movements in stock markets as well as individual stocks. You've routinely seen that through the last few decades where, you might see Business Week talk about the death of equities right before, a few months before a multi-decade rally. And you've seen similar things, near the tops of markets and near the bottoms routinely over and over. Blood in the streets near March 2009. And in this video, I wanted to explore the idea of whether or not this Time magazine naming Elon Musk is potentially a contraindicator, effectively saying, you know what, it might be rough going for Tesla stock going forward, given this aspect of Time magazine capturing the general zeitgeist when everyone else is excited about something. Does it mean it's time to head for the exits? And in fairness, look, Elon Musk has a lot going for him, a lot beyond just Tesla stock, but that is the one public vehicle that investors can be looking at. If this is your first time tuning in, my name is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. Now, in full disclosure, this is not financial advice, and I did not own stock in Tesla. TSLA is the ticker. So earlier today, Time selected Elon Musk Person of the Year. Despite his numerous achievements, the article opens with his $300 billion net worth. This definitely gets my spidey sense tingling because it's like, well, wait a second. What are we focused on as a society? Are we focused on that dollar figure? Or are we really focused on the accomplishments? Because that's really the part that gets me interested. And I think it makes me nervous when I see that. That's being the opener here. Now, look, clearly a ton of accomplishments. We'll talk a little bit about that in a second. But this raises the questions for me. Did Time just inadvertently top Tesla stock? Did they effectively top tick it and you could see Tesla stock being a house of pain for, let's say, the months or even years ahead? Is Tesla stock potentially cursed? Let's see how the last few Persons of the Year played out that were also entrepreneurs. So this actually goes back. You have to go back a decade to Mark Zuckerberg. This was before, however, this is 2010. This was before Facebook went public in 2012. So I'd personally disqualify it. So I am not going to personally think of Facebook as, saying, hey, this is proof positive, proof negative of whether or not there was a curse, given the fact that they weren't even public when Mark Zuckerberg was named Time Person of the Year. I think part of the reason why he was named was due to the novelty of social networks scaled around the world. First time you could say, easily connect hundreds of millions of people. That said, even though Facebook was not public at the time, Facebook has obviously done very well since then, growing by hundreds of percent. And in full disclosure, I personally own stock in Facebook or Meta, and you can check out my prior video on it if you're interested. Before Facebook, you have to jump back another decade, where the last active entrepreneur was Amazon's Jeff Bezos, who was named Person of the Year in 1999. While Amazon went on to deliver exceptional results in the decade since, the Time magazine cover almost perfectly timed the top of Amazon stock. Almost immediately following the cover, you can see is right over here, December 1999, Amazon stock fell like 95% from peak to trough, while the stock largely went nowhere for the next decade. You can see for years and years and years did not do anything. And this does, sort of tap into my general concern looking here is Time effectively tapping into the zeitgeist that's potentially pumping up Tesla stock, resulting in a lofty valuation that needs to get worked through, very similar to Amazon. So this is a data point that I would reflect on. This is the last time it was a public company, Jeff Bezos, 1999. Before Bezos, the last active entrepreneur was Andrew Grove, the chairman and CEO of Intel. Grove was named Person of the Year in 1997. So what happened to Intel stock since then? Well, Intel went on a wild ride where the stock appreciated by a couple 100% in about 3 years. It peaked in 2007. It peaked in 2000, so it Time Person of the Year in 1997 peaked in 2000, then lost all of those gains in the years ahead, while the stock pretty much went nowhere from the point that it was, named Person of the Year over the next decade. So you had this wild ride where it declined, then went nowhere. So, maybe you get this wild ride if you get further speculation. I mean, this is just really interesting. I mean, obviously in both cases, in all these different cases, you're really talking about really interesting technological developments. So that Time Magazine was right to call these things out, but were they right from a valuation perspective? And that's a whole other conversation. I mean, look, you can see how this played out with Intel, where the valuation expanded significantly in short order. That 1997 to 2000 run-up, where valuation expansion was a significant, I'd argue even potentially the majority component of Intel's gains during that period, as their price-to-sales multiple expanded from around 6 times to 15 times. And then the rest of the decade, it was resetting at a lower rate. I find this a fascinating case study, given the fact that I recently did a video on Intel, and this just shows you, like, yes, you might have an amazing technology, an important technology. Chips are a revolutionary technology. It's really important for the human species. I'm glad that society recognizes that this is important, and Time Magazine calling out Andy Grove reflects that importance. But I'd argue, like, looking at this, there's a big disconnect between something that's awesome and something that's necessarily an attractive return. And the other key aspect as we look at this is that, yes, you can get a lofty valuation, but you might reverse that in the years ahead. And so that is a real key component for investors to think about as a risk. So what about Tesla? First, a quick plug where if you're interested in following along with my personal financial journey, go to unrivaledinvesting.com, where each month I call out potential multi-baggers, as well as my personal portfolio. We also have an exclusive community dedicated to learning and trying to find exceptional companies on Discord. So once again, go to unrivaledinvesting.com, click join the journey. And if you enjoy videos like this, please make a point of it hitting that subscribe button and hitting that thumbs up button. So first, one should understand I really like the initiatives Musk has undertaken. He's a genius, and his innovation inspires real hope for the future developments of the human species. That said, excitement and inspiration are a different mindset, in my opinion, than sizing up the current risk reward. And so, you look at Tesla, and very similar to Intel and Amazon, Tesla has seen a monster. You can see this monster expansion in valuation in very short order, from around 1x sales in 2019 to over 20x sales now. This explains the vast majority of Tesla's returns in the past few years. If you see any reversal in valuation, let's say back to 2 to 5x sales, that could be a major headwind, similar to what Intel and Amazon faced. I mean, personally, I find this too hard for me on my own personal journey, but I'd definitely love to revisit this at a lower price. I definitely want to hear your thoughts, and so definitely leave a comment below. But I think it's worthwhile to understand a couple of things here. Like, one is looking back at that Intel story. Like, Intel, fan favorite, Wall Street darling for years. Valuation expanded. Folks are rah about the excitement of the future. And it's great to be excited. But once again, you need to parse out valuation from excitement. And here it is. You get the full spectrum, where now today, Intel is now, I'd argue, a value stock. You have these deep value guys that ignored it several decades ago. And now they're saying, oh yeah, this is now a value stock that trades around 10 times free cash flow. Check out my video on Intel if you're interested. But it's just amazing to see Wall Street darling to deep value or potentially deep value stock. And so it makes me concerned when you see that full spectrum, the gamut of how drastic investor sentiment can change. It makes me wonder if you could see the same thing with Tesla. And seeing the recent changes with the Federal Reserve, I did a whole separate video on this about effectively save yourself. Check that out if you're interested, where, given a tighter liquidity environment, it makes me want to think about my own personal portfolio, especially as I look at Amazon and say, wow, here it is, unprofitable company. What a wild ride, 90% plus drawdown from the peak to trough. And so I want to make sure on my holdings, I'm really lock in, like, knowing what the company does, and that I'm very, very comfortable with thinking about what's the valuation. And so, yeah, a lot of folks have benefited, myself included, from this current environment. I'd argue current environment being excluding the last few months, where unprofitable growth stocks did very well. And part of that was execution with some of these growth companies, but a large part was also valuation expansion. I think that period is potentially over given the Federal Reserve's, changes. And if you see that where now we're entering the period where valuation multiples are contracting, you really want to make sure you button up your portfolio and say, oh yes, I'm very comfortable with these multiples. And looking at Intel, looking at Amazon, along the way, those were huge drops in valuation multiples. So I wonder how many folks are going to say, oh yeah, I am rock solid. I am diamond hands on Tesla stock at 20 times sales. Or is it 15 times sales? Or is it 10 times sales? And that's why it's personally too tough for me, is I can't quite pencil out like a crazy risk reward at 20 times sales. But hey, if you have a strong opinion about it and you can back it up with some numbers, I'd love to see it in the comments below. If this video has been helpful for you, talking about just the prospect of a Tesla curse, given the Time magazine naming Elon Musk Person of the Year, please make a point of hitting that subscribe button and hitting that thumbs up button. Thanks so much for tuning in.